those conditions. Turning now to jobs and wages, employment expanded nationwide, modest to moderate increases.
Good afternoon, ladies and gentlemen. Here's a quick recording, real-time screens, just like the previous one, on the release of the Fed Beige book that you're listening in the background. You can just see, monitor. This is the 15-minute view. I'll be switching over to 1 hour in a minute, and you can clearly see how the market reacts to it. This is the way you learn. That's the reason why you're with Safe Trading. Just watch this for the next couple of minutes.
Some price increases for building materials were noted. Energy prices described as flat to slightly lower. Businesses also saying they expect mild to moderate price growth in the next 6 months. A few snapshots and some pressure points from around the country. In Cleveland, manufacturing, yes, is improving, but there is caution among manufacturers going forward. Both Chicago and Kansas City are telling us that lower crop prices are putting stress on the agriculture sector, as Kansas City in particular loading, however, a slight improvement in cattle and soybean markets. And in Dallas, the fabricated metals manufacturing sector is actually benefiting from that overall rebound in the energy sector. Next up for the Federal Reserve, a 2-day meeting on May 2nd and 3rd. Back to you.
All right, thanks very much, Hanson. What is the Beige book telling us about the economy, how our market's reaction? What does it mean for the Fed? Let's bring in Mark Zandi, Chief Economist at Moody's Analytics, and Karen Kimbrough, Head of Investment Strategy at Merrill Lynch Wealth Management, and CNBC Senior Economics Reporter Steve Policeman also here. Karen, I'm going to start with you. I always do that. I always call you Kim. Karen, based on what you've heard here today, any clarity about where you think the Fed moves next?
I think they clearly are going to move higher, and I think this keeps the door open for them to hike. I'm a little mystified myself why the market is sort of pussyfooting back and forth about pricing another hike. It's entirely plausible based on activity that's described as moderate or modest, but very broad-based across the nation. We see pressure in the income market with incomes rising, jobs being expected to be filled. This is all good, but not too hot. This is exactly what the Fed wants, a nice, steady pressure upward in activity and inflation, allowing them to hike.
Mark, I'm assuming that you think a hike is coming at some point. Does this give you any clarity as to when, which meeting will happen?
Likely June. I think the key language in the Beige book is around the tightness in the labor market, jobs, labor shortages. And they mentioned, I think Hampton said, unskilled labor as well.
Even having trouble filling low-skilled jobs in some markets,
There you go. And so I think that's going to be business's number one problem going forward, is finding labor. And it's pretty much across the board. And with that, I think that's a signal that the Fed has to normalize monetary policy more quickly. Not in May, that's too soon, but in all likelihood, June. That would be the next one.
Can we just say one thing real quick? I think also something that Hampton mentioned was the loan growth that the Fed is seeing. That's really important. There's been a lot of discussion about whether or not we're seeing sufficient loan growth. So I think now we're getting a sense that maybe that's starting
because of the bank earnings. The big news out of the bank earnings is loan growth was slowing, and this seems to say this now.
It's anecdotal, but it seems to suggest that maybe we're going to
bias down. There's measurement issues. He's done a lot of work on residual seasonality. And the GDP numbers only showed up in Q1.
For the record, I didn't call it residual seasonality, Mike, just for the record.
Oh, you didn't? I thought that was good. I gave him credit for that. Okay. But so, the economy isn't as soft as that they suggest. But the economy is not as strong as the soft data, the survey data. There's biases in that as well. There's each of these surveys, when they interview people, if the people they're interviewing, each time you do the survey, they're going to get people that are more excited who respond to the survey.
I'll present a full report tomorrow morning on this, and we've been looking through the All-America survey. What we find is that the sentiment data is related to the election. There is a surge in Republican optimism. We cannot tell if that's going to result in a surge in Republican spending.
But Mark Zandi,
we even roll off the Democratic spending.
on that note,
But you look at surveys that track the same people over time. They're not putting different people in the survey each time. Those surveys have not increased nearly as much. So that goes to the excitement that people who wanted Trump to win, they're very excited. And so I'll take that survey. I'll respond. So it overstates the case. I didn't say this before, but not.
Mark, there's a story on the website about you, written by Jeff Cox. He says you've got a quote here that you predicted a lengthy recession under Donald Trump, and you have since changed your mind. The reality regarding the economy's performance is not nearly as good as Trump supporters believe, nor as bad as claimed by Trump detractors. You had predicted a lengthy recession. You're not anymore. Why not?
No, that's not true. So Jeff and I talked, and hopefully we can correct that piece. The exercise I did back in the summer was, what if candidate Trump got exactly what he said he wanted? Now remember that. What did he want? He wanted big tariffs on China and Mexico. He wanted the undocumented immigrants, 11 million, to leave the country. He wanted big government spending increases, big tax cuts, which would lead to big budget deficit. If that's what he got, then yeah, he could have recession. And I think, that's pretty intuitive. He could have recession. But no one thought that he'd actually, as he became president, get what he said he wanted during the campaign. And no small part because everyone would realize that was the disaster.
And they're a failure, in a way. Failure so far getting done. Makes you
I am no less optimistic than I was 6 months ago. The economy was fundamentally strong 12 months ago. It's fundamentally strong now. It would take a lot to derail that train. And given what's going on in Washington, there's nothing coming down from Washington to derail that train.
It was very clear. I remember that very clearly when I came out. It was interesting, but everything had to go right in terms of what Donald Trump wanted to accomplish in order for that conclusion to come about.
So, I just took exactly a given. That is right. Exactly what he
Exactly. Karen, just quickly, financials, the price action has not been good, even though across the board, except for Goldman Sachs, they've been pretty good. You see in the Fed Beige that loan volume is picking up. You don't see it in the data yet. So, now what? What gives? Yeah.
We still like financials. We think, honestly, we are in a race of rising rate environment. We think that there is opportunities here for loan growth to eventually come. And the sector is really important to the overall S&P. So we expect that will be picking up.
I don't want to jump in, but just quickly on Melissa's point, is it possible that because of these different loan places that are not necessarily Fed governed have popped up, that we're seeing more loan activity just outside the Fed data sphere?
Well, it's definitely possible that more broadly credit extension is happening outside of
It's not that, there's not even a point.
We're talking the bond market.
The bond market could be
You need a website. Why not?
That's part of a bigger global capital market that we now have. But what I would say is that the corporate sentiment boost that we see, whether it's due to Trump and just Republicans aren't going to spend, that does drive corporate activity.
Just very quickly, guys.
We got to get to the president so quickly.
The probability of a June rate hike is now down below 50%. It's 44%. I think this is a pretty big deal. The market is beginning to doubt the resolve of the Fed to hike in June, and that's because of this weakening data. If it turns around, we go right back up to pricing it in, but the market has begun to price it out. I think that's a big deal.
All right. Thank you, ladies and gentlemen. Good to have you on. Mark, Karen, and Steve. President Trump hosting the Super Bowl champion, the New England Patriots, at the White House right now. With a notable late cancellation, quarterback Tom Brady. Brady saying the reason for his absence was family-related. Here's President Trump.
The New England Patriots are big supporters of our military and America's veterans. Joe
Cardona, where's Joe? There he is in his beautiful Navy. Thank you, Joe. Serves in the Navy Reserves and is a graduate of the Naval Academy. Coach Belichick is the son of a Navy veteran, and that's Bob Kraft. He's becoming a pretty famous guy for winning, I'll tell you that. To him and Belichick, wow. You do so much to support our military. Bob's been my friend for a long time, and he wants to support our military. So, what a group of champions, all of them. And Bob, I want to commend you for building such an extraordinary organization. 5 Super Bowl victories since 2002. Really unbelievable. And I'll say this right now. George Steinbrenner, as you know, is a very good friend of mine. And George was a great champion, but there was a little more turmoil. A little more turmoil in his victories, and that's okay. He was another great one. Since Bob bought the Patriots in 1994, they've won more division titles, conference championships, and Super Bowl wins than any other team. No team has been this good for this long. He's built a culture dedicated to winning. And he started it with his coach, and I want to tell you that is some special man. It's called the Patriot Way, and that really starts with Coach Belichick. And I want to thank all of you for being with us. The Patriots are an incredible organization, and this Super Bowl victory was a complete team effort. That's the beauty of what they do. They win as a team. With your backs against the wall.
Good afternoon. What we're seeing developing here on the daily is a bit troubling because we keep on getting rejected at the 50 SMA. So given where we are, you need to basically watch this very carefully on your own screens because the E-minis keep on getting rejected close to the 50 SMA. If this candle, if it's inverted hammer right now, turns red, it's a strong possibility that we're going to retest the 2320 level again and possibly the lower end at 2322. Having some hedges on SPX and SPY puts would pay off very handsomely if that does occur. In the meantime, we do have the green candle here on the volume, so that shows there are basically buyers lurking underneath. And it's not a red sell candle like we saw yesterday on this inside day. What we're also seeing here on the full stochastics, which is a pretty good intermediate term indicator, that we have a nice little curve up from deep oversold conditions. The RSI here reached 20, and as you know, the stochastics is basically the first derivative of the relative strength index. And that is projecting there is strength underneath the market, that they want to take it a bit higher. Part of the reason could be that it's monthly options expiration on Friday. That generally is a bullish event, at least for the first part of the day. So we could get that little burst up into tomorrow and early Friday, which you need to basically capitalize on. Individual stocks are a different story. You know, they're holding out pretty good, Tesla. But the overall pressure in the market is certainly there. It's indicated here on this inverted hammer. This could turn red, and that would be expanding this, and that would be somewhat negative. Would be negative, and now it's white. You can see that red now. So there you go. So the puts are doing extremely well. Bought around $1-2. They're at $4.15 right now. Those are the 23.45 puts. Expiring today, and the 2340s are right now about $1.70, bought around the dollar or so, $1.77 right now. This yellow line here highlighted is the 5 SMA, and this has consistently acted as a rejection point, and it is pointing down. So again, there's mixed signals here, and this SMA, this 5 SMA, this yellow line, as I've explained in several ACS sessions, needs to basically turn up in order for a short-term trend change. At this point, it doesn't look like we're going to get one, and there seems to be some real selling pressure which is down about, Dow is down 94 points, and it's almost reaching 5, the 2345 puts. So congratulations to all tactical traders. You need to focus, any business, any profession, you need to put in some real grunt work to learn. Do sign up for the advanced coaching sessions. There's a lot more that I teach, and it will help you manage your trades better. Keep watching.
Together in pursuit of the ultimate goal, a goal that very few people achieve. And you've achieved it 5 times, many of you. And our coach and our owner have achieved it 5 times. Great, great talents, great, great people. Whether you're trying to win a Super Bowl or rebuild our country, as Coach Belichick would say, there are no days off. And just a quick story about the coach. So I had won the primaries, and I'm now in this rather heated election that a few of you have read about. And he wrote me this beautiful letter after the primaries. Congratulations. He said all sorts of things that were really good. I mean, it was really a beautiful letter. And it was very close to going before the election. And I called up and I said, Coach, do you mind if I read the letter tonight to a stadium full of people in a very, very big and important state? And he said, you know what? I'd rather not have you do that. Could you send it back to me? I'm going to give you another one. I said, no, that's okay. No, I want to give you another one. Now, immediately to me, that means he's going to tone it down, because what he said was so nice. And you know what he did? He toned it way up. It was much better. It was much better. He made that the greatest letter, and I did very well in that state. Thank you, sir. That was very good. But, you know, he's just a very special guy, and he's tough. Is he tough, fellas? He's tough, he's smart, and he's got a great heart. So the Patriot coaches and these great players have delivered iconic American sports moments that will last forever. We're going to watch that game over and over and over. That game will last forever. 5 Super Bowl wins in the era of free agency, which is really, really tough. What an achievement. So again, congratulations to Super Bowl champion, New England Patriots. And with that, I'd like to ask a very special and talented man, and a great friend of mine for a long time, Bob Kraft, to say a few words. Thank you all very much. Thank you, Mr. President. It's a true honor.
All right, we were listening to the President Trump meeting with the Super Bowl champions, New England Patriots, and there you have head coach Bob Kraft taking the dais. If any other, the owner, excuse me. That's me, you know, don't know anything about football. The owner of the New England Patriots taking the dais there. Any other news, we'll certainly bring that to you. Meantime, this is still on tap on Powerline's All Eyes on Fox. On the reports, the Murdochs are getting ready to cut ties with Bill O'Reilly, the latest after the break. Plus, Google's already disrupted search, maps, and email. Now they're setting their sights on your body. We will take you inside their new genome mapping experiment straight ahead, and later a big upgrade for Coca-Cola, while one analyst in Coke is ready to refresh their brand. Tough run us over here on Power. We'll be right back.
Some trends are so influential, they can move entire sectors of the market. Take the price of oil. It has the potential to impact the performance of all energy companies. So why continue to take single stock risk? The Energy Sector Spider ETF offers the diversification of the entire energy sector while minimizing your single stock exposure. The Energy Sector Spider, the next chapter in investing. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully. Did you know at Schwab, traders have always gotten more? Now they get it for less. And that's the $4.95 online equity trades. No one is lower than Schwab. Not E-Trade, not Fidelity, not Scottrade, not TD Ameritrade. Put everything Schwab has to work for you. Knowing it's all backed by our satisfaction guarantee. If for any reason you're not happy, we'll refund your fee or commission and earn 500 commission-free trades when you make a qualifying deposit. Just one more way, you know Schwab's got your back. Always has, always will. CNBC Americans' perspective on the 2020. His outlook for the long term. Swap Box tomorrow, 6 a.m. Eastern. Let's go. She's a dog.
Okay, let's go. Find your awesome with the Xfinity X1 voice remote.
That's amazing.
Your insurance company won't replace the full value of your total new car. The guy says, you picked the wrong insurance plan. No, I picked the wrong insurance company. With Liberty Mutual new car replacement, you won't have to worry about replacing your car because you'll get the full value back, including depreciation. And if you have more than one Liberty Mutual policy, you qualify for a multi-policy discount, saving your money on your car and home coverage. Call 1-844-635-3386 for a free quote today. Liberty stands for Liberty Mutual Insurance.
Hey, you guys, come on.
Yeah. All right, we'll get to the casino.
Okay, what do we got?
Okay, watch this. Do the thing we talked about. What do we do? It's gonna be great. Watch it. Remember what we were saying?
Go, I.
See that? Yeah.
I'm gonna just go back to what I was doing. Find your awesome with the Xfinity X1 voice remote. Quick market check here. The S&P 500 has turned negative on the day. It's worth noting the turn if you hold the intraday on information technology. The tech sector within the S&P 500 in the past half hour or so, it has turned negative as well. Of course, the session is right now. Let's get to Elon Musk for a news alert now. Elon, Melissa, steel industry executives will be meeting with President Trump and Commerce Secretary Wilbur Ross tomorrow at the White House. Some of the big companies represented will be ArcelorMittal, Nucor, U.S. Steel, Tinker Steel, and AK Steel. In addition, the head of the United Steelworkers Union, Gerard, will be there too. We're told they'll be discussing the potential for an investigation into how imports, particularly from China, are affecting the types of steel that are used for national security purposes. Think armored plates, military personnel carriers, even the fasteners that are used in battleships. Our sources say that the White House is considering an executive order that would direct the Commerce Department to look into this issue. If any violations are found, that could result in additional tariffs on foreign steel. And this, of course, comes on the heels of an executive order that the President signed just yesterday, seeking to tighten the rules requiring government agencies to buy American products. Industry sources say that they hope these actions will send a message to Beijing as it pulls together the 100-day plan on trade that they agreed to during President Xi's visit to Mar-a-Lago. Guys, we'll see how these discussions go tomorrow.
All right, Alon, thank you very much. Well, meantime, your next guest remains firmly bullish on the U.S., primarily on the equity side. Paul Frank heads up the Stadium Tactical Growth Fund. That is a 5-star ETF-only fund ranked in the 99th percentile of the past year. Welcome to Power Lunch. Thank you very much for joining us, Paul. Appreciate it. A lot of stuff going on today, so we're going to kind of keep it tight. Can you give us your macro viewpoint on the markets and give us a couple of ETFs and investments that you like right now? Sure. Thank you for having me on. We're pretty neutral right now in the market, which means we're about 75% invested in U.S. equity ETFs. 4 sector holdings we have is one is KBE, the banks, and XOP, which is the oil boat spider ETFs. We've had them since September in the fund. And some more recent holdings we have in there is Vanguard Healthcare, BHT, and we also own XLP's consumer staples. On the broader market side, we're kind of got a barbell approach really. We're a little overweight small caps, and we're a little overweight the large cap growth. Oil is weaker again today, Paul. I know that the oil ETFs have been some of your favorites out of the whole market. Do you still remain bullish on the oil and gas sector? Yeah, well, oil looks nice to us. I mean, again, we've owned it. It's pretty flat since we owned it since the fall. The one nice thing about the oil is we build a really diversified portfolio of ETFs. So the oil really
This is going to end in about 20 seconds. You can clearly see what's going on. And this is the 5-minute chart, a lot more noise. And there you are. This could be a possible point of support right there. Okay? That's it for now.